This meeting is being recorded.
Great. Welcome to the audience. Welcome to the panel. My name is Jana Siebeneck from the InsuResilience Global Partnership Secretariat. And I'm so happy to open the 5th live talk session facilitated by the InsuResilience Centre of Excellence on Gender Smart Solutions, together with PharmD. I would like to say thank you to the big number of participants that signed up for this webinar, for being keen to address gender issues in our work on climate finance or climate and disaster risk finance and insurance, short CDRFI. And thank you to PharmD for supporting the facilitation, and to Vartika Shukla for writing the foundational study on this topic and moderating today's event. We are delighted to use this live talk to launch our new study on the same topic of gender and poverty-related barriers for urban poor to access CDRFI on the example of India, which Vartika will present shortly to you. You can find the study on coe.insuresilience.org, and I will also share it in the chat. Today's live talk is part of our live talk series where we cover different topics on gender and CDRFI. For example, on how to monitor and evaluate gender responsive climate and disaster risk finance and insurance, or on gender lens investing. Our next live talk is being organized on International Women's Day in March on a gender responsive toolkit for policymakers. You can follow us on @IGPGender on Twitter or on LinkedIn to be informed and sign up for that. Shortly, I can give you a brief background on the Center of Excellence. We are a knowledge sharing platform that is hosted by the InsuResilience Global Partnership and co-financed by the German BMZ and Global Affairs Canada. But it is filled with live and knowledge products by a great community of gender champions, policymakers, practitioners, and the COE Gender Working Group. Among others, we offer technical advisory support for your gender activities that you can apply for, commission step-by-step guidance notes on how to create gender responsive CDRFI, commission studies, organize events like these, and offer scholarships to high potential women leaders. You're warmly invited to share your resources on gender and CDRFI with us, and we can distribute it on our channels, on our platform, on the website. Thank you, and I'm delighted to give the word to our Gender Working Group co-chair, Felana from CARE Madagascar, to give some opening remarks. Thank you, Felana.
Thank you, Jana. My name is Felana Andrianaivo. I'm the Senior Program Manager of Climate Change and Resilience within CARE International Madagascar. As you know, CARE International is co-chairing the InsuResilience Centre of Excellence, Gender Working Group, together with Global Affairs Canada Climate Finance Division. And we are happy to see this live talk series supporting a community of experts throughout the aim of integrating CDRFI gender responsive approaches as a cross-cutting topic and meet the full spectrum of urban poor and vulnerable communities' needs. Today, Live Talk seeks to understand CDRFI in the context of the urban poor communities in order to create an enabling environment to access CDRFI solutions with a particular focus on women beneficiaries. Neither gender equality nor resilience to climate change and disasters can be achieved without addressing poverty-related barriers to accessing climate and disaster risk financing and insurance, with a particular focus on gender in the urban context. This is the starting point for today's live talk, and I look forward to the discussion on this theme today. Thank you.
Thank you, Felana. And a warm welcome to everyone who took time out from their busy schedule to attend this talk. I'm Vartika Shukla. I'm a financial inclusion and gender consultant based in India. I'll be moderating the session today and will also be speaking about the findings from the study we conducted in India over last several months to understand poverty-related barriers to accessing climate and disaster risk financing and insurance with a particular focus on gender. Sylvia, can we please have the slides? Thank you. Thank you very much. So this presentation is based on the knowledge and experience of Mahila Housing Trust staff and low-income segment women members of MHDA. It covers their diverse perspective on climate change adaptation, risk reduction, and risk financing solutions. Next slide, please. Climate change is predicted to have a significant impact on global poverty levels. According to a World Bank report, climate change is projected to push up to 132 million additional people into extreme poverty by 2030. This is because many of the people who are living in poverty are also the ones who are most vulnerable to the impacts of climate change. The different characteristics and living conditions of an individual or community can influence their vulnerability to climate shocks and stresses. A recent global study demonstrates that women are 3 to 4 times more vulnerable to climate-related disasters than men, with the prevailing evidences indicating that gender differentiation is based on historical and existing inequalities and discriminatory norms rather than biological sex. They conclude that the disparities in impact differentiated by gender are due to a lack of opportunities for women to access education and information. Next slide, please. Urban poor population are individuals and households living in urban areas who lack access to necessities such as food, shelter, and healthcare, and are unable to meet their basic needs due to limited income and resources. They are often marginalized and live in informal settlements, slums, or low-income housing areas. In India, urban poor face several challenges, including limited access to basic services such as water and sanitation, limited access to education and healthcare, and limited opportunities for income generation. They are also more vulnerable to the impacts of disasters such as floods, heat waves, and extreme weather events due to their location and poor housing conditions. In this research, populations that we spoke to mostly worked in the informal sectors as tailors, embroiders, domestic helpers, or sellers in clothes market, and home-based workers. They commuted to work on foot, by bicycle, or by public transport. They were in the age group of 30 to 50 years and were married. Most of the customers had completed basic primary school and had a monthly income for their household ranged from USD 60 to USD 250. Interviews revealed that their knowledge of social security schemes such as insurance, old age saving schemes, and health insurance schemes were limited. Most of them do not actively save in bank accounts, but have a small amount of savings at home. Savings are made to pay for their children's education and wedding expenses. Urban poor populations are particularly vulnerable to the impacts of climate-induced disasters. This is due to a combination of factors like location. In location, urban poor population are often located in low-lying or flood-prone areas or in informal settlements, which puts them at higher risk of exposure to floods and landslides. Second is housing. Urban poor population often live in overcrowded and poorly constructed housing, which may not be able to withstand the impacts of extreme weather events. Lack of infrastructure is another factor. This population may lack access to basic infrastructure such as clean water, sanitation, and drainage, which can increase their vulnerability to the impact of climate-induced disaster. And climate change does not affect women and men equally, as the impact of climate change are often felt differently by women and men. even when the whole urban poor household gets impacted by the climate-related shocks, women and girls in the families face a higher vulnerability to any kind of climate stress. This is due to differences in social, economic, and cultural roles and responsibilities. Women also tend to have limited access to resources and decision-making power, which can make it more difficult for them to adapt to the impacts of climate change. In addition, women are often responsible for the care and well-being of their families and communities, which means that they may be disproportionately affected by the health impacts of climate change, such as spread of disease and extreme weather events. As primary caregivers for children and elderly, women face adverse preconditions regarding their food habits, food availability, health care, and livelihood assets due to a lack of access to property and resources. Pressure on women intensify during climate-related disaster as they have to take care of other family members, also apart from their regular household responsibilities. Further, climate change can also aggravate existing gender inequalities and discrimination, leading to increased violence and displacement of women. In this slide, we summarize the climate-related impact and increased vulnerability of urban poor communities, especially women, starting with extreme heat. So urban population in India mostly live in poorly constructed, poorly ventilated houses. They have tin roofs or roofs covered with high-density polyethylene. This constructions result in increased temperature of up to 5 degrees centigrade within the houses. Because of the heat, they cannot sleep properly at night and cannot consume a proper diet, as the heat makes it too uncomfortable to cook and eat. Heat-related stresses also lead to many health issues like low blood pressure, diarrhea, dehydration, and body rashes, even though they may or may not attribute these health issues to rising temperatures. For women specifically, this leads to increased caregiving responsibilities. Despite high temperature, this low-income population continue to work outside or at home. For women and men commuting to work by walking or cycling and working under the sun as construction workers become difficult and in extreme heat. When they cannot attend work, they lose their daily wages. Also, women working from home or as small businesses lose their working hours as they cannot work inside the house due to the heat in the afternoon when the temperature is highest. Often, men stay out of the house throughout the day while women are at home. Even if the temperatures within their house reach unbearable levels, in few communities in India, women are not allowed to go out of the house or on the terrace. Men may sleep in open areas like terraces on hotter nights. The same is not an option for women. Local community norms also dictate how women dress, which generally involves more layers of clothing with their heads and face covered. Traditionally, clothing was made of natural fiber like cotton. For affordability, synthetic clothing is used, which can pose health and skin issues. In summer, when women menstruate, they may suffer from rashes and infections due to use of poor quality sanitary napkins and innerwear, also because of clean water scarcity. Due to heat, households' monthly expenses also increases because of increased consumption of cold water, ice, electricity, and health expenditure. Next, we will speak about extreme flooding. More often than not, urban slums are in low-lying areas, which lacks proper drainage facility leading to flooding within the houses. Their homes are tiny with minimal storage spaces, so most of their belongings are arranged on the floor, either packed in small trunks or boxes or piled up by the category. Flooding results in damages and loss of household assets, food supply, appliances, furniture, and important documents as well. Many people do not even realize the loss of documents until they need to use them again. During severe flooding, they temporarily relocate distress migration to makeshift homes over bridges. During the monsoons, it can take up to 2 to 3 days to drain out the flood water. This is because stormwater drainage systems are also often non-existent or clogged due to the lack of solid waste management, leading to waterlogging during rains. Livelihood remains a priority, even during the severe rains and flooding. These communities face disruption of livelihood due to flooding and dampness in their homes. Those who work from home in businesses like chips making or embroidery work need to stop taking work entirely during the rainy season because of the mold growth which might happen on the raw material or even on the finished product. Those who leave the house to work face difficulty commuting. As other needs like education and health tend to take priority over housing, enough resources are generally not allocated by these households to build a better home. And shifting to a new locality is often a challenge, as it may disrupt a child's education or result in longer commute to work and eventual loss of livelihood. Next, in our research was something that we saw in the space of adequate financial protection. Can you please move to the next slide? For urban poor. And it was made very obvious that there is not enough financial protection available for this particular segment. And this is a significant issue, and that can have a major impact on their well-being and their ability to meet basic needs. To elaborate on the current bouquet of financial products used by this population, there are three major categories. Number one is savings. Urban poor do not have dedicated savings for heat or flood-related stresses. Most of the savings are general savings or are dedicated to the purpose of a child's education. They depend heavily on credit though, from informal sources like borrowing from employers or friends to manage the risk of heat and flood-related stressors. Talking about credit, when larger value credit, say something greater than USD 180 is needed for house repairs, such an amount is borrowed from formal sources of credit. For example, credit cooperatives like MHT or self-help groups or MFIs. The last is insurance, which is perceived as savings and not as risk transfer tool. Endowment insurance plans are preferred by the population. Most households have never had access to any insurance that protects their assets and livelihoods in the event of a shock. There is a clear lack of knowledge and awareness about life, health, and accidental insurance options. Climate risk insurance is virtually unheard of. Next slide, please. So to summarize, there is a lack of awareness and understanding among the poor of climate risk. Higher health risk due to climate-induced stressors increase expenditure and reduce economic activity. For women and girls, this results in increased unpaid care and domestic work, and also reduced access to education. There is informality of income and lack of formal property rights, especially among women. There is also a lack of physical place to go and access face-to-face advisory services. Cultural beliefs and gender norms prevent women and girls from leaving the house and owning a mobile phone and using it for financial services. Further, there is a lack of sex disaggregated data on beneficiaries in urban poor communities. No CDRFI solutions tailored to the needs of the urban poor are in place yet. Also, there is a lack of affordable insurance solutions for the urban poor that consider their irregular and informal income. Finally, let's look at some recommendations that we make in this paper. Next slide, please. These recommendations are based on the entry points identified in this study to address barriers to CDRFI and increase the ability of the most vulnerable to climate risk to access CDRFI solutions. First recommendation is to collect sex disaggregated data in urban poor communities to design suitable CDRFI solutions. The goal should be to include the perspective of the urban poor when designing these solutions. There's also a need to establish communication channels suitable to reach urban poor communities, which can increase awareness and understanding of climate risks, its effects on lives and livelihoods, and how financial tools can help to reduce and manage risks. There is also an obvious and urgent need to raise awareness among financial service providers and academia that CDRFI solutions for the urban poor are lacking and that there is a particular demand for new solutions that addresses gender differentiated needs. At product level, there is a need to understand that insurance solutions are not always the most obvious solution for the urban poor. In addition to the payment difficulties of the most vulnerable, insurance solutions should take into account that they should be used mainly for residual risks and for special shocks and disaster events. For that degree of flooding and intensity of heat waves that occur annually, which means long-term solutions such as loans and may make more sense as the recurrent cost of insurance would otherwise increase too much. Also, product solutions for the urban poor relating to managing climate and disaster risk could be offered as a combination of pre and post-disaster financial protection tools with a focus on reaching women and men. A combined approach could be achieved by building a disaster-resilient microfinance program, including a calamity fund for MFIs to facilitate a better response to the urban clients during climate shocks and stresses. Lastly, community-based organizations can offer monthly subscription-based health plans to their members. They can partner with healthcare service providers to offer such health plans. Such health subscriptions can be bundled with weather-based insurance and credit for home improvement. Packaged products of this nature can assist the urban poor in adaptation and risk reduction. With that, I'll close my presentation and we will move into our panel discussion on the topic, why are we lacking CDRFI solutions for urban poor and what are the approaches for solutions? We have with us a very diverse panel of experts. Our panelists are Ms. Rajeshwari Gorana, who is consultant at Mahila Housing Trust in India. Mr. David Yancombe is Senior Officer Resilient Development at ICLEI. Ms. Zara Ahmed, who is Research Lead at Center for Disaster Protection, and Ms. Beatrice Wack, who is COO at Microinsurance Catastrophe Risk Organization. I will start with my first question to Rajeshwari. Rajeshwari, given that MHT works at the grassroots levels, according to you, what are the specific barriers or disincentivizing factors for grassroots organizations and credit cooperatives for engagement into CDRFI in urban poor communities?
Thank you, Vartika. Before I answer, I would like to introduce the Mahila Housing Trust. It's a 30-year-old organization working with urban poor women who live in informal settlements and low-income communities and are mostly working in the informal sector. And I think, as Vartika has elaborated, one of the defining characteristics of urban poor women is informality, that they work in the informal sector. And what does that mean? That means that they do not have meaningful levels of employment. And in addition, as she explained, the urban expansion into hazard-prone zones, inadequate services, inadequate housing, just makes their, amplifies their vulnerabilities. And so, which means that it also has informality and poverty also has a bearing on what kind of services that they can access, financial or otherwise. So MHT works with urban poor on these issues. When it started out, women asked that, look, a house is a very important asset for us and we would like services. We would like to see how we could access the city government to improve the inadequate service provision, improve our housing. And so MHT started working with a lot of communities in many cities. And at some point they said that, look, we also need housing finance because the poor like to invest in housing and they do not do it in a capital intensive way. They do it over, in short steps. But someone needs to provide them capital. But because they're working in the informal sector and they do not have access to, incomes that are, I would say, call them credit worthy by the mainstream financial sector, MHT came up with this idea of creating or establishing credit cooperatives. Credit cooperatives are, people-driven organized financial institutions. The poor women, buy shares. And then these shares, along with the savings, becomes the capital, and the capital is rotated for providing financial services to those who have subscribed to the organization, to the credit cooperative. But it comes with serious limitations. The thing is, credit cooperatives cannot borrow capital from the open market. So they're limited by the savings that the poor put in the bank and the shares that they buy. Now the shares, unlike in the open market or in the stock market, do not give them more rights if they buy more shares. So even if you buy 100 shares, your vote is counted as just one, which means that they cannot, work around, the institution to their favor. While that is good for a certain extent, it also limits the interest of people to put money into the credit cooperative. And the other thing is credit cooperatives cannot offer checkbooks. They cannot link their accounts to digital payments. And so these are serious limitations. So while there are no mainstream financial institutions that will actually understand the needs of urban poor and create solutions, the ones that are existing are severely hampered by guidelines that will not allow them to offer a diverse solution. For instance, an insurance solution, it's not, a credit cooperative cannot. It can perhaps market insurance products of mainstream insurance provider, but they cannot tailor make one. So these are some of the major issues with the layer of financial institutions that are serving the poor in true sense. And I think this is one of the biggest barrier. It's a systemic barrier. It's nothing to do with the poor or the way things are, whether it is gender or climate or whatever. So we need to, I think, most importantly, look at system level actors and say that what can you do? How can you change things in a way that it works for the poor? And that is what MHT calls pro-poor solutions. We need more of those. And this is a systemic barrier that I think our hands are tied and we cannot do much, even though we wish to do, because we understand the needs of the poor women. But in addition to this barrier, I think what Vartika already touched, education is greatly needed for all system level actors, but I'll speak of the poor women. They do not actually read climate risks because they're so worried about their livelihoods, their, the service provision, the housing and habitat solutions that they require, that they just do not acknowledge that there is a climate risk, which means that proactive measures have to come from various organizations, including governments, to actually say that, look, take notice of the climate risks that you're facing. That is when perhaps we'll see more proactively that they will be interested in addressing those. That is one. And the second one is we should I think the need is for both financial and non-financial solutions. You need housing solutions, you need habitat solutions, you need solutions from the local government in service provisioning. And when all of these come together along with the financial solutions, it makes sense for the poor. So you just do not heavily focus on one of them. You need this bouquet of services, and which means that, access to these, once they are there, it also is a matter of how do you improve access to these solutions, whether it is a disaster risk financial solution or whether it is a cool roof solution. How do you improve access? I think we'll have to address those barriers. Yeah, I think that is all I have to say. If there are any questions, I'd like to take. Thanks, Jana. I think I am on the mark.
Thanks, Rajeshwari. I think you summarizes it wonderfully, that there is a multi-pronged approach which is needed, which includes education at the grassroots level, as well as taking the understanding that the grassroots level organizations already have, and bringing it to such system level players who can then design a product for them and bring it to these customers. Next, I will come to you, David. From you, I'd like to know, how is your organization combining urban infrastructure insurance with the interest of women and other vulnerable groups? Also, what role does data play in developing such solutions for the vulnerable groups, especially in urban areas?
Sure. Thank you, Vartika, and hello, everyone. So I work for ICLEI, which is cities network, helping cities all around the world walk the path of a safe and sustainable and of course resilient development. But before this role, I was the Chief Resilience Officer for the city of Quito. So in my answer, I'm going to combine these two roles to better exemplify both information requirements and what is the insurance role. So I'm going to start with something that occurred in Quito 1 year ago, which was basically a landslide and a flash flood in a certain region of the city. And it had consequences in terms of lives, but also in terms of livelihoods, but also in terms of homes, of people, and in terms of infrastructure. And most of the people in the city of Quito and the experts, they went down and tried to explain the whole thing from a biophysical perspective. So this happened because these settlements were located in these areas that are not the best ones, or basically that created a risk scenario. But there is some additional ingredients in these type of situations, which is basically the socioeconomic ingredients. The exclusion, the spatial and the socioeconomic exclusion, the lack of access to, first of all, food, health, education, and so on, that basically perpetuates or helps perpetuate poverty and so on. And this in turn is one of the drivers of why urban risks are created. So this needs to be very much understood. And I think talking about structural but also systemic problems needs to be on the table and at the core of the discussions. And then we can jump into what is the role of insurance. And so now I'm going to refer to that. So the Urban Insurance Infrastructure Facility, it's basically a project that is being implemented by ICLEI for Latin America and the Caribbean. And basically what it aims is at providing an insurance solution tailor-made for 10 cities in the region for both infrastructure, but also for 7.5 million vulnerable population in these 10 cities. This project is already an interesting addition to the already existing urban risk management toolbox. Needs to be taken into account that insurance by itself is not going to solve problems. It needs to support solving other problems, and is just one additional tool. Being said that, the aim is to first of all ensure or provide an insurance solution for the critical infrastructure that is supporting cities in their pathway on reducing inequality and eradicating poverty and so on. So that's one bit. That's the first part of the solution. The second part is the 7.5 million vulnerable population. Then the question is, who are they, where they are, and how do you understand them? And that's already a little bit a more difficult question to answer. And I think you, Vartika, put it on the table very well. We need to have an understanding of these different groups and their intersectionalities at the end of the day. So that is something that we are going to be supporting the 10 participating cities as part of the program, on how to identify these groups and how to map them, but also how can they be affected, not only from the perspective of a hazard, but also how can they respond. It's not the same thing to have a full family facing a catastrophe than to have a female household or a single mother in those situations. That's completely different. So going back to my experience in Quito, and I'm just going to really quick tell the story around the answer to the COVID pandemic. Well, what we did initially is we used the census of the country and we turned those data into maps. We knew how and where these vulnerable populations were located. Therefore, we knew, for example, that in Quito, and I'm guessing that is the case of other cities, single mothers distribute as a group in a different way than people who doesn't have, than groups that do not have access to social security systems, for example. They distribute in a different way. Sometimes you have overlap, sometimes they are the same people, but that means that poverty and gender they have a different representation. And when you add those maps, then you can also understand how to kind of like fine tune the support of these different groups. However, the census only allows us to go up to a certain level, up to a certain scale, because the census is based on a block to block basis, more or less. So what is the next step? Then when it comes to play and is very useful is connecting with neighborhood leaders, for example, the ones who are on the ground and the ones who know the people living around them and the ones who are in contact with the most vulnerable, and they know which door to knock to support these families when difficult times strike. As a result, Quito now has, let's say, geolocated map of vulnerable population by different groups, specifically in these points. So what I'm trying to say is that technology helps to close these gaps. We need to understand what kind of resources are out there, but also community-based initiatives are very much welcome. That helps to understand what kind of help can be provided, but also to enhance the kind of help that can be provided. I hope this was a contribution to this very well panel, and thank you.
Thanks, David. Thank you. I heard the multi-pronged approach that you are talking about more at a city level, as well as insurance should not be the only way to deal with such stresses for urban population. Very interesting. I think my next question is for you, Zara. So as per the research that you have done, what are some lessons that you learned for CDRFI from examples of gender responsive social protection systems that could have positive impacts on the urban poor?
Thank you so much, Vartika, and thank you also to this for the invite. I just wanted to say that in addition to my research lead role at the Center for Disaster Protection, prior to that, I also led a research program at UNICEF on gender and social protection. So I'll also be drawing on some of that experience when I'm responding to you. But before I go on briefly, so the Center for Disaster Protection works to change how the world prepares and pays for disasters. So we bring countries together with international development, humanitarian, and private sector organizations to find the solutions and advocate for change in this area. And one thing I wanted to point out is, while there are not a lot of examples of DRF when it comes to cities, some of the work that we've done at the urban context of the center is some of our advisory work has looked at the Caribbean water utilities risk pool. And we know, for instance, cities at a meso level can be an entry point for DRF with those that have potential municipal budgets for funding. But again, there are relatively few examples. I do know there's a project for Lagos and Accra that I'm happy to share links to afterwards. And finally, as I'm speaking more to social protection, we are also working in the Sahel region and with the World Bank on the Sahel Adaptive Social Protection Program, where we'll be looking at social protection, disaster risk finance analysis, and financing instruments. It's already been said by Vartika and my two previous panelists, but disasters have a disproportionately negative impact on vulnerable groups, including women and the urban poor. And there's something that struck me that you said, Vartika, that the urban poor experience loss of livelihood assets. They don't have lack of access to savings and also limited knowledge of social security schemes. And when you said that, it reminded me that those working in disaster risk finance, they are increasingly considering channeling it through social protection, which in itself has demonstrated its effectiveness to reduce income poverty and economic security, but also address certain gendered risks and vulnerabilities, including in the areas of education, health, violence, and economic empowerment. And for clarification, by social protection, I'm referring to those policies that prevent or protect people against vulnerability, poverty, social exclusion, so cash transfers, public works programs, cash for work initiatives. And it's increasingly being recognized that social protection schemes that are flexible and that can rapidly scale up to expand their coverage to affected groups can cushion individuals, households, communities, also cities against disasters. So one example is around adaptive social protection, where you could rapidly increase the number number of participants to a program, so a horizontal scale up, or another one could be increasing the amount of cash, so a vertical scale up. And to give a specific example of horizontal scale up, during COVID-19, there were registries of potential social protection participants that were expanded, including in urban communities. So in Malawi, for instance, the government implemented an emergency COVID-19 urban cash intervention to poor and vulnerable households, and it piggybacked on the country's existing social protection system. Now, why is that important? Because usually by pre-arranging financing, these DRF instruments can ensure the correct amount is available immediately when needed to scale up a cash transfer program in response to a disaster, which in theory can play a role in building household resilience to disasters, including in cities. But I should give a note of caution when I'm talking about social protection, because while it has expanded in the last few decades, social protection coverage globally still remains limited. So we know around 45% of the world's population have access. And Vartika, you also mentioned it in your presentation, not many people you spoke to have access to social protection. Additionally, many low and middle income countries, they don't have established social protection systems. So these are certain things to think about. And in my last 30 or so seconds, I just wanted to reflect on, I had 3 insights, but I'll only touch on one. When we're increasing investments in approaching financing social protection, we have to ensure it's responsive to gender equality and social inclusions. So the resources need to get out at the right time, but it needs to reach the right people and taking in consideration their diverse needs and vulnerabilities. It's already been touched on that climate affects women and girls differently. So also, for instance, when we are trying to identify or pre-identify recipients to programs, maybe for instance, or using exposure or historical loss data, ensure we're also reaching the women, girls, and diverse groups that are affected, so that the social protection is channeled directly to women. And the last thing I will say is that it's also really important to engage with women's groups and local led groups to understand how it is that disasters affect those groups. I will stop and I'll add any more in Q&A, but thank you very much.
Thank you, Zera. And I think you raise a very, very pertinent point that how social protection can really have the potential to scale very quickly if the infrastructure is already in place in case of any such stresses that come through. For the final question, I'll turn to you, Beatrice. In the insurance sectors, what are the barriers and opportunities from a regulatory or public policy standpoint to developing CDRFI products that address the needs of the urban poor?
Thank you very much, Vartika, and thank you also for the invitation. Well, the development of climate and disaster risk finance and insurance faces regulatory and market barriers in all developing countries. Regarding regulatory barriers, first, the anti-corruption and money laundering measures are not adapted to the population we want to serve, since they request data and documents that urban poor usually don't have, such as proof of residence and an exact postal address, sometimes impossible in slums and other suburban areas and informal settlements. On the other hand, there is a dependence on physical paper, given the lack of regulation that allows subscription through digital signatures of biometric identifications. Therefore, subscription processes are slow and complex, reducing the potential for penetration among population in situation of poverty. And from the perspective of market barriers, there is a gap between the existing offer and the need of the poor. First, due to the difficulty of reaching scale and financial sustainability of some insurance products with voluntary products. The one-to-one is very difficult with urban poor. Second, the typical multi-activity of poor women in urban areas who usually have several sources of income, change often their telephone number and even their residence, make it really difficult to access them and design products that suit their needs. On the other hand, the risks to be covered are really complex, and may include cascading events that are not easily detected with a single parameter and that include sometimes human decisions in the process, such as the overflow of a dam or floods dependent on urban infrastructure that change over the time. So it's very difficult to really address the risk to be covered. Also, the cost of technology can hinder greater access to insurance against natural disasters. For example, flood sensors that are installed house by house in high-income markets are not viable in developing countries, are really expensive. So what can be done, or what is Micro doing to address those challenges? Well, Micro developed a business interruption coverage with broad insurable interest as a solution to serve vulnerable population in urban areas. We think that this is an optimal way to help micro entrepreneurs to try to capture all the different activities in one only insurance. Micro proposes a parametric coverage with a payment for an average affectation of the neighborhood or a specific area of a municipality, facilitating the effective subscription and not asking for the number of level of the building, the years of the construction, or the exact type of activity that the people are doing. So where we care about the people and not really about the specific activity or the people where or exact the characteristics of the place they are situated. In terms of and what is needed to go further, in terms of regulation, we think that too many areas making anti-money laundering measures adapted to vulnerable population, that is really important. It's a big barrier to financial inclusion in general, but for insurance for sure. And sometimes we think that making insurance mandatory could be useful. There's nothing worse for the poor than losing their productive assets in a catastrophic event, as a result of which they are left without income. And on the top of that, they owe the credit, which they obtain their productive assets in the first place. So it's really the worst scenario. And to finish with my my exposition, I think that it is really needed comprehensive risk management solutions in a really holistic way that include adaptation measures and adaptation measures and risk transfer solutions. And as one of the precedent panelists said, is not the insurance by itself. I think it was you, Vartika. Insurance itself, it's not a solution because it is really meant to take only the residual risk, but it should be put together with savings, with credit and insurance all together, because it's not one only solution to climate-related risk. And that's all for my part. Thank you very much.
Thank you, Beatrice, for that very insightful answer. And I think what I'm hearing across the panel is that there is a need for a holistic approach. There is a need to understand that the barriers that that this population face and design for that particular population, and just not copy paste a bigger product onto this population just for the ease of it. And there is also a very urgent need for a lot of education and awareness initiatives for the population, and to make it very, very relevant to them, and maybe also bite-sized so that they can digest it and really internalize it, and then they can act on it. So thank you all the panelists for this insightful discussion. And now I'll hand it over to Jana.
Thank you, Vartika, for this great summary. I think we are almost about to close the live talk. Of course, we had some time dedicated to the Q&A. There was no question in the chat, so I think we have a minute of time to ask the audience openly if you would like to raise a question in the chat now, or even unmute yourself if that's possible, or just write your question into the chat and we can raise it to the participants. Just give 30 seconds of time. In the meantime, I think to wrap it up, we can really say that, and you showed it in your presentation as well and in your research, we really find ourselves often sitting in our offices and designing CDRFI solutions from our desks. And I think these findings really show us how important it is to include the perspective of the most vulnerable, to include the perspective of potential beneficiaries of CDRFI solutions, and really commission first-hand research, have interviews, conduct focus group discussions, and these things to inform those policies and those products with the perspective of the most vulnerable. So instead of designing solutions for them, design solutions with them. I think this is the overall message of this live talk, and I see some activity in the chat. I just try to summarize. What sort of education topics are we talking about here, and how does work towards reducing residual risk? Is somebody willing to talk on the topic? I think it goes to Vartika. You said there is a need for education, and of course, when it comes to residual risk, I think you found in your research that there is often a lack of awareness of what to do with residual risks, right?
Yeah. So in terms of education, what we saw in the research was that the interviews that we conducted, most of the people knew insurance as a savings product because they just knew about the endowment plan. So they will deposit some money which will get collected, and they will get interest at a later time, and they will use that particular amount to get their daughter married. But they're not even looking at insurance as something to set off their risks. So that is the kind of education that they're looking at. First of all, making people understand that what insurance is. B, what other options in terms of social securities are available to them and how they can access it. So these are the three major things that we came across. And in terms of residual risks, insurance companies are also need to see that the product that they are making in terms of climate, because these extreme events are getting more aggravated every year. So like if you are going to make a payout, say when the temperature hits 45 degrees centigrade, it is not going to work because it is going to happen every year. We need to make it more contextual for that particular location, for people to really set off their risk when an unusual event happens, and not something which is going to happen annually. So to cover the residual risks.
Thank you. I think that was it for today. Also, we covered the main things in 60 minutes. And again, I can say we are so grateful. I'm so grateful for a lot of participants that are interested in including gender considerations into CDRFI. If you have any more questions, please feel free to contact us. Also after the event, we also got requests if we can share the presentation. We will look into handing over after this event to all participants a PDF version of the presentation. And also please check out the link that I posted in the beginning of the session on the newly published analytical study that Vartika presented on. It's really insightful, and finally a study where we also have asked potential beneficiaries to share their perspectives and their risk perception. So with this, I'm very happy. Thank you so much for the lively discussion. Thank you so much to the panelists for your insights and regional experiences. And yeah, thank you so much. Great.
Thank you.
Thank you very much.
Have a nice afternoon,
day.
everybody.
Thank you.
Or morning.
Goodbye.
Thank you, everyone.
Thank you, everyone.